Hey everybody, Jeb Gerald here with Plentiful Wealth. Today, I'm going to talk to you about how to build your bucket portfolio so you can not run out of money in retirement, so you know, hey, where's my check going to come from every month? I think that's a big deal. It's a big deal for my clients, and I'm sure it's a big deal for you too. And this is one of the questions I received from a prospective client last week. And he said, Jeb, I'd really like to work together, but I want to know, how are you going to make sure that my money is going to be there every month? What's the portfolio going to look like? And so I just showed for him this exact same chart. And just like he enjoyed it, I think that you might as well. So I want to go through everything. But the basic idea is you have three buckets, 1, 2, 3. They have different levels of risk because they're targeted to different time frames. You want to make sure that you have money in the first bucket that's going to last for your first 1 and 2 years of retirement, or really for the next year, the next 2 years. Then you have the bucket in the middle that's from years 3 to 6. It's going to be a little riskier, but still not high risk. And then finally in year 7 plus, you're going to have about 60% of your account. And again, it's not going to be high risk, but it's going to be more volatile because it's going to have primarily stocks. But if you said, hey, I also want to have some crypto, I want to have maybe some venture capital, I want to go a little crazy with 2 or 3% of my account, that's where it's going to be. So to start out, in years 1 and 2, you're going to have enough cash to cover your expenses for those 2 years. So if you're taking out 5% of your income per year, that's going to be about 10% of the total portfolio. This can be held in cash. It can be held in short-term bonds. It could even be held in a short-term CD. The point here is you want to have liquid money. You want to make sure that it's available when you're ready for it. And you don't want to have any market risk there, because if the market pulls back, you don't want to be saying, can I pay my bills this month? That's really important. So safety is the key here. Next up in your, I would call it just your bond portion of your portfolio. It can be intermediate bonds, so it can be corporate bonds, it can be government bonds, but they're going to have a little more risk there. Essentially, they're going to try to match inflation. You could also have structured products in there. Structured products are something I'll talk about in another video, but the short explanation of what they are is they're an investment that's based on an index that tracks an index but also has downside protection. So this bucket, it's going to have the amount that you would spend in years 3 to 6. Each year you're going to move money from the middle bucket to your short-term bucket. Same thing, you're going to move money from your long-term bucket to your middle-term bucket. And every year you're just going to have that happens. You're going to rebalance to make sure that you're keeping your risk tolerance. I actually just recorded a podcast about talking about having a plan. It's really important, and this all goes back to your plan. Finally, on year 7 plus, this is around 60% of your portfolio, 50 to 60%, depending on your risk tolerance. It's primarily going to be stocks. You're going to diversify that between large cap, mid cap, small cap stocks. You're going to have some international in there as well. If you're a little riskier, if you want to look at crypto investments, anything like that, this is the bucket that they would fall into. Same thing for venture capital, anything like that, hedge funds, all that sort of stuff. It's all going to be in the year 7 plus, what I would consider the growth bucket, because this is where you're trying to not only keep up with inflation, but beat inflation, because you want to make sure that your money continues to grow. It's really important. So overall, this is the bucket portfolio. This is how you're making sure that you don't run out of money in retirement. And then in another podcast, in another video, I'll show you what it actually means to turn this into income. So thanks for joining me here today with Plentiful Wealth. I'm Jeb Gerald. If you have any questions, check out plentifulwealth.com or shoot me an email at jeb@plentifulwealth.com. Thanks.